This lesson is on the current account. A current account is one of the components of the balance of payments. We will be examining the different sections of the current account in this lesson. What is the balance of payments? The balance of payments, BOP, is a record of the transactions between a country and the rest of the world. Every country must track the inflows and outflows of money between its residents and other countries' residents. This is done by keeping an account named the balance of payments. This is like what businesses do. They employ accountants to track transactions of the business. The difference is that the balance of payments is an account for a country, not an individual business organization. Examples of the transactions of economic value between a country's residents and non-residents that you will see in the BOP are exports, imports, investment income from abroad, and foreign aids. The balance of payments has three parts, namely, current account, capital account, and financial account. We are considering only the current account in this lesson. The current account. The current account comprises trade in goods, trade in services, primary income, and secondary income. It is the largest part of the balance of payments. This diagram shows the components of the current account of the U.S. between 2018 and 2023. Trade in goods and services forms the largest part of the current account. Next, we will consider the parts, one after the other. Trade in goods. Trade in goods includes all goods entering and leaving a country's economic territory. Goods are physical or tangible items that can be touched and seen, e.g., computers, cars, foods, beverages, industrial supplies, and so on. Those goods and services leaving for other countries are exports, while the ones bought from other countries are imports. The difference between the values of export of goods and import of goods is the balance of trade in goods, visible balance, or balance on goods. Trade in services. Trade in services records the value of services exchanged between residents and non-residents of an economy. Services are non-physical or intangible items, e.g., banking, transportation, tourism, and insurance. Export of services minus import of services gives the balance of trade in services, invisible balance, or balance on services. Balance of trade. It is also called balance of trade in goods and services. It is the difference between the exports and imports of a country. Balance of trade is the sum of the visible balance and invisible balance. It is the largest component of the current account. It is balance of trade surplus, or simply, trade surplus, if a country exports more goods and services than it imports. But if the value of imports exceeds the value of exports, a country experiences a balance of trade deficit, or trade deficit. A deficit on the balance of trade is a negative value, while a surplus is a positive value. The title of this graph is Goods and Services Trade Deficit. From the graph, the actual figures for the U.S. international trade in goods and services for April 2024 is minus $74.5 billion. And minus $75.1 billion for May 2024. The third component of the current account is primary income. Primary income is the inflow and outflow of income accruing to factors of production, such as dividends, interests, wages, and profits. Primary income is also called income flows because it is income from working, which is wage, or income from possession of financial investments, which is dividend. The balance on primary income is the difference between primary income receipts and payments. A primary income account deficit, which is a negative value, means payments on investments and workers' compensation exceed the receipts from investments and workers' compensation. A primary income account surplus, which is a positive value, means income outflows for investments and workers' compensation are less than the inflows from investments and workers' compensation. The graph below shows the UK primary income from Quarter 1, 2021 to Quarter 4, 2023. The primary income is from various investments, grouped into direct, portfolio, and other investments. The deficit in this account increased to £8.5 billion in Q4, 2023. The last component of the current account is the secondary income. The secondary income account shows current transfers between residents and non-residents. Transfers are payments from a country's residents to other countries' residents without receiving anything in return. E.g., grants. Transfers can be in the form of money, or of goods, or services provided without the expectation of payment. The balance on this account is the difference between secondary income receipts and payments. The graph shows the UK secondary income between 2004 and 2014. The balance was in deficit throughout the period. This means that transfer payments going out of the country, debits, exceeded the transfer payments coming into the country, credits. What is current account balance? The current account balance is the sum of the balance of trade in goods and services, primary income, and secondary income. The balance of trade in goods and services is the sum of the balance on goods and the balance on services. Another name for balance of trade in goods and services is net exports of goods and services. So, the current account balance can be restated as the sum of net exports of goods and services, net primary income, and net secondary income. The current account can have a deficit, which is a negative balance, or a surplus, which is a positive balance.